As Haley mentioned, my name is Boz I'm with Technology Business Research, and I'm joined by my colleague Katie Merrill. So we want to spend a few minutes today to discuss the opportunities and challenges as it pertains to ecosystem relationships, and as we think in a bigger world of data sovereignty and now AI sovereignty. So some of the items to the agenda for today are looking at the AI governance implications that are really starting to heighten up, and how both sets of companies, technology vendors and services vendors, are preparing for what it means to their staffing models, to their go-to-market models, commercial models. We're also looking to, as the data sovereignty and AI sovereignty starts to build out, what are some of the opportunities for interoperability? And we know interoperability of data is not a new concept, but we're starting to understand, looking to different, partnership relationships, how they're changing, which vendors are thinking through the interoperability framework, what it all means to the ecosystem as a whole. So the kind of the emergence of what we call multi-party alliances set up essentially. And last but not least, we'll spend a few minutes talking about how all these changes and how all these motions among the parties are impacting vendors that are partnering with each other's commercial models, how it all reflects on their go-to-market messaging and so forth, especially as AI, agentic AI, Gen AI, all these flavors of AI are starting to really pick up steam essentially, right? So that's kind of like the three main areas of the discussion today, and talk a little bit more about the implications and some vendor examples along the way. So this is who we are. You guys can always connect with us via LinkedIn, and so send us a message if you have any questions. And with that, I'll turn it over to Katie to kick off. Katie, go ahead.
Great. Thank you, Boz, and thank you, everyone, for taking the time today. So before we go into the ecosystem discussion and share some new data that we have, just going to spend a few quick minutes setting the stage for you with the overall market opportunity. So on this slide, we have the market forecast for cloud infrastructure and platforms broken out by region through 2029. In total, we have the market growing at about a 19% CAGR to hit $1 trillion by 2029. And that's notable because it will put it above the SaaS market, which is really driven by some of the headwinds that Gen AI is posing to the applications layer. So we do suspect a pretty drastic change for how the cloud market exists today. And so it should reinforce how the opportunities across the stack are really starting to shift. From a geo perspective, APAC is growing the fastest. You look at the relative size and maturity level. When it comes to AI-related growth, we do see AI use cases landing disproportionately in the public cloud. And so you see a lot of growth reflected really in the US market for 2025 into the 2026 period, with changes in regulation abroad and really the level of uncertainty at home. We are seeing more investment, more sovereign infrastructure, really from the hyperscalers who drive the bulk of this market that you see. And a few years ago, sovereign cloud kind of started as more of a marketing play, but it really did emerge into a niche delivery method that the hyperscalers offer. And so you see all these developments, and it's not just about operating a central cloud within EU borders, but it's really extending hybrid infrastructure. So think AWS local zones, Google's GDC, which now supports Gemini, out to these different locations. So clients are using it not just for low latency use cases, but really as part of the data sovereignty strategy. And so one of the things that we focused on in this latest iteration of our ecosystem coverage is really, as these developments materialize, as the vendors invest in this kind of localized footprint, how does it unlock opportunities for the ecosystem participants? And that's kind of where we'll dive into today. So with that, Boz, I'll hand it over to you.
Okay, yeah, as Katie said, we're going to try to provide some more insights through that ecosystem lens and the various reports that we publish here within our ecosystem intelligence. As Katie brought up, I mean, it's about ecosystem. The services providers do trade on trust, right? So developing the region-aligned resources and partner strategies to take advantage of any of the growing opportunities within the infrastructure platforms markets, while accounting for the Gen AI implications on the commercial and the staffing model, will certainly test the durability of those relationships, as well as in addition to raising questions about what's next in the operating model. So the data we have here on the slide essentially is, so what we do is, for some of you may not be familiar with our ecosystem intelligence portfolio, it comes from our cloud ecosystem report. So that report is looking at a dozen of global systems integrators and consultancies and their relationship with the three hyperscalers, AWS, Microsoft Azure, and GCP, Google Cloud. So what we do in that report is Catie and I and other colleagues of our services and cloud teams are collaborating to look and understand how the practices of those GSIs and consultancies are changing, what it means in terms of the number of people, what it means in terms of number of what's the revenue look like, and what's the kind of the growth rate, as well as some of the implications on the operating model. So this report was first launched about 3 years ago. We just in the latest iteration, about a month ago, we expanded the coverage within that report that is focused on the geo-specific cuts. So in this report, we now also have the geographical splits across the SIs and consultancies, hyperscale practices, both on the revenue side as well as the headcount side, including some certified resources, trained resources, and so forth. So basically expand the data set because we want to make sure we understand how companies are building those resources and investing in those resources, where those people are, as we think about that lens of AI sovereignty and data sovereignty that market is demanding for, essentially, and having those capabilities to address that demand. So the two graphs are presenting a combined view. The one on the left focuses on the total practice revenue across the 12 vendors that we track within that cloud ecosystem report, and we split by region, and the growth rates as well. And the graph on the right is focused on the combined headcount, on the average headcount by practice. So when I say by practice, meaning the three hyperscale practices. So we look at that lens. This is just the aggregate view. We have the data on vendor specific as well as the geo lens. So what does the data suggest? When we start looking at the data and trying to understand what it all means from a go-to-market perspective, the overall takeaway is that the cloud ecosystem data split paints a picture that many would expect, right? The traditional services model is still in effect, and the IT services vendors still need boots on the ground. While the Americas regions account for the most revenue, the APAC region commands the highest headcount, as services vendors lean heavily on the traditional labor arbitrage model. At the same time, IT services vendors will always need to align themselves with hyperscalers. But AI could certainly cause some of those vendors to shuffle their operating model. So when we look at the three regions, we see probably EMEA, the geography to watch in evaluating a potential shift in the operating model and a go-to-market model for the vendors. Why is that? And the way we think about it is that if the traditional model holds, we expect the EMEA headcount to rise as sovereign cloud initiatives take shape, evening out the current dispersion between regional revenue and headcount as vendors try to deliver value by demonstrating culture affinity while remaining in compliance. If the metrics don't even out, so that's a second scenario, like looking to the future, we believe that it will be a strong signal that the model changes long expected due to the growing growth of AI have begun, which creates a testing ground for building out what we call a non-linear revenue growth model, right? Revenue is expanding ahead of headcount, essentially. Regardless of how the ratio between headcount and revenue tracks in the coming quarters, two truths still remain the way we look at that. First, companies with the experience managing and staffing a global workforce have an advantage due to their ability to align their strategy with global hyperscalers. And second, the regional SIs will need a seat at the table to help these global vendors navigate the IO-centric regulatory environments. Otherwise, they could face a threat as those regional systems integrators look to win share through pricing agility and tight-knit relationships. So right now, kind of to summarize it, it's business as usual, but AI is starting to push the narrative around that non-linearity as well as the compliance for having data sovereign services by locally placed talent, and increasingly the role of the RSIs as we move forward. With that, I'll turn it over to Catie back to talk a little bit more about data and data locations. Catie, over to you.
Great, thanks, Boz. So just to put some more context around this theme of data sovereignty from the customer side. So this is research from our customer study where we're asking IT decision makers at large enterprises several things, including what are your top pain points when it comes to cloud technology and how are you overcoming those issues? So nothing is going to displace security, but you see data location and privacy it remains a big concern for customers and a big barrier to cloud adoption in general. In terms of how it's addressed, the hyperscalers, of course, have their infrastructure and all the native encryption and monitoring capabilities around that. So clients generally have the expectation that it's really going to be supported by their CSPs directly. And when we talk to customers, we do get feedback on the value of a sovereign cloud environment being very important for customers, particularly those in regulated industries. And then more on the vendor side, really on the go-to-market front, you do see these new, alongside these new sovereign clouds, really an increased investment in programmatic structure, putting out, certification capabilities around digital sovereignty, where partners can go in and demonstrate to clients their expertise in things like regulation and compliance, and how do you make a migration to a sovereign cloud environment relevant in really the broader cloud transformation discussion. The other point to note here on this slide as well is interoperability. It's not as high on the list in terms of pain points for customers, but there is nuance in how it's being addressed. And so most customers are likely to leverage third-party solutions and vendors, which instinctively it makes sense if you consider from a services perspective all the different skills across these technology platforms. And I think despite some of the hype out there, the hyperscalers still have a very high degree of lock-in that they're creating for customers on their platforms. So that, of course, is going to be a factor as well. That said, agentic AI is kind of changing things a bit. We are seeing cross-platform entitlements, they are in progress, and you see more open frameworks. So Google's A to A, agent to agent is a really notable example. There's still a lot of work to be done around A to A and MCP in terms of actually getting them ready for the enterprise. But it does, make a compelling case for, can you have this level of standardization that potentially the services partners can leverage alongside the ISVs and kind of position themselves, as we say, as orchestrators of this emerging multi-party alliance structure that we'll talk about. And so just to give you an example, Deloitte really increasing its investment with Google Cloud. It has a strong partnership with ServiceNow, and how those parties are coming together to, build agents for ServiceNow specific use cases really around the front office. But based on A to A and hosted with GCP. So that's just one example that we're seeing out there within the ecosystem, and kind of how these agentic ecosystems could ultimately work. And so that's a segue into our next piece on the multi-party framework.
Yeah. Thank you, Catie. And as Catie was saying, the multi-party alliances discussion, it's something that we've been looking at and trying to assess the readiness of the market, readiness of the different vendors. So the graph that you see on the slide is coming from our latest, what we call Voice with the Partner report. So that report is looking at 3 groups of vendors, including the OEM providers, cloud and software vendors, and the professional services and consultancy. So 3 main categories of vendors that we target. We target to talk to alliance managers and above. And we are assessing the relationship between those 3 kind of sets of vendors, where we start with the big question of what are you missing from your relationship with the other 2 groups of vendors. So we have a certain set of questions, similar set of questions across the 3 groups of vendors. And we're trying to go after, understanding how those relationships are evolving around the commercial model, staffing model, go-to-market motions, and just trying to understand, how it all works from an ecosystem perspective. So one area of that research is focused on the multi-party alliances. So we're trying to assess how vendors within the ecosystem across those 3 groups of vendors think about multi-party. Are they ready for being is part of a multi-party relationship? And what we mean by multi-party relationship is that this relationship by 3 or more vendors. Traditionally, alliance partnerships go in the two-dimensional, so a professional services and technology provider go to market. That's a well-established playbook. But now we're looking into, especially with the need for better interoperability and discussion and addressing different pain points of the personas that those companies address, and enablement and advent of AI and agentic AI is certainly presenting that opportunity for a different collaboration, which raises the expectations for different governance model, raises expectations about accountability, different pricing model, as I mentioned. So when we look at the data, that we asked a question around how each of those groups of vendors are approaching the multi-party alliances as a go-to-market strategies. All three groups see the value of development and management of multi-party. Regardless, it's albeit in a varying degrees, with services vendors being the most optimistic, followed by the cloud, and then OEM providers. We look at the OEM providers, lean on while we think the way we interpret the data from an OEM perspective is the OEM providers lean on their transactional mindset and see the multi-party construct as an opportunity to lead sharing and referral network, while service and cloud providers are most excited about the opportunity to cross-sell and upsell services. At the same time, the OEM providers seem to have slightly contradictory views. It's about half of the respondents we surveyed believe the multi-party alliances offer complementary strengths, or about a quarter of them still think that multi-party alliances setup is too cumbersome and hard to manage. So services and cloud providers basically have now a challenge or opportunity in front of themselves to find a way to convince the OEM providers to see the value the same way as they do. Influencing the partners can be certainly an ongoing endeavor. I mean, we know that everyone is trying to position themselves as a technology agnostic, but we all know that everyone has their preferred list of partners they work with. So we think that leaning on a common partner, such as NVIDIA, which we've seen a lot more of that in recent quarters, probably not surprising, which all parties currently seem to be pursuing relationship with, certainly, can help the OEM vendors see the long-term value. At the same time, service and cloud providers need to ensure they invest in the right frameworks, as I mentioned, to avoid creating any gap in between vendor expectations and client support. So it appears that the advent of Gen AI and agentic AI certainly have helped to introduce that multi-party setup much more in a robust manner, because we are constantly hearing relationship like Deloitte, HP, and NVIDIA, or Dell, NVIDIA, and Accenture, or Deloitte. So there's that NVIDIA is ongoing, kind of a constant denominator, so to speak, and it's kind of building up on that. We certainly have examples of other, but NVIDIA and introduction and the not introduction, but the bigger role of chip manufacturers and platform providers, certainly are enticing vendors to look through that multi-party ecosystem lens, I should say. Another example of a multi-party ecosystem provider here is ServiceNow, and that's another piece of the portfolio that we expanded just earlier this year. So just like with cloud ecosystem, we expanded the data cuts around geo-specific analysis. We actually just launched this spring the ServiceNow ecosystem report, similarly, where we take a look at 10 global systems integrators relationship with ServiceNow. We have done estimates around the practice sizes, the size of their headcount, and understanding, more importantly, how those practices are changing, what's making a difference in those relationships between the SIs and ServiceNow, as we see ServiceNow kind of becoming a very common, not similar to NVIDIA, a common denominator as it pertains to the multi-party relationship. So I'll turn it back over to Catie so she can spend a moment on ServiceNow and some more background of how we see the company.
Great. Thanks, Boz. So yeah, as Boz mentioned, this is just a snapshot from our new ServiceNow ecosystem coverage. ServiceNow, serving as an orchestration layer, just from a technology perspective, they have always fit themselves very nicely within the ecosystem. The workflow is what they do best, and so I think you're going to start seeing that really come through in this era of agentic AI. But they're also moving into a lot of other markets, data cloud, tackling a lot of new opportunities and trying to unlock a lot of new TAM. It's kind of creating, more overlap within the ecosystem. So it risks, I think, protecting that neutrality a little bit. But it's a very interesting time for them. So this slide is really just to illustrate some stats around their ecosystem, including their own services organization. I'll just point out that the headcount for services continues to decline, and the revenue has really only just started to revive again alongside Now Assist. So from a delivery perspective, I think getting partners' faith behind Now Assist is really the top priority. They did launch a new PLA for Now Assist earlier this year. From a sales perspective, the net new ACV contribution for Now Assist is growing, likely very small. It'll be interesting to see how opportunities kind of open up as ServiceNow expands more at the PaaS layer. So think of like Workflow Data Fabric, AI Orchestrator, Agent Studio, those kind of tools. Yes, there's Now Assist, but there's these assets around building and governing and orchestrating the agents that for partners may view them as a little less threatening and could present new opportunities to really build around these solutions and then actually change the business process. So that was a big theme that we explored in this new research stream as well. And Boz, I'll hand it back to you to expand on that.
Sure, thank you, Catie. And this is basically the vendors that I mentioned a moment ago, the global systems integrators and consultancies that we have profiled there. ServiceNow businesses, basically, right, as part of that ServiceNow ecosystem report. You can kind of see the sphere size is the revenue size, and the plotting of the growth rate. You can kind of see it on the y-axis for those vendors. A lot of the typical GSIs, but certainly a couple of consultancies like KPMG and EY certainly worth keeping an eye on as we're thinking about the growth pace and the growth size of those practices, especially as each party collaborates around the development and training support of the services, and try to make sure they have the bench. We continue to see that vendors on both sides struggle with knowledge management. And I think it's something that all have recognized that there's a better way to do knowledge management, and there's various mechanisms that some of the vendors are testing along the way. But the performance of those companies' ServiceNow practices reflects a lot on often reflects on how mature the overall IT business is, but also how they work with alliance partners as a whole. So, for example, Deloitte, right? So Deloitte has been really mimicking a lot what Accenture has done at the broader ecosystem and alliance level, how they actually go to market. So we know Accenture has a dozen or so they call business groups with the kind of closest alliance partners. Deloitte has only with two vendors, with ServiceNow and with Salesforce. Deloitte calls them ServiceNow Asset and Solution Group. So this is kind of a sort of by design, largely because the Deloitte's business model, but still Deloitte has a lot of resources being invested behind developing relationship with key technology partners, and we do have Deloitte profiled across all the ecosystem reports, including the cloud ecosystem, the ServiceNow, as I said, the SAP, Adobe, SAP, Oracle, and Workday, as well as the Adobe and Salesforce reports that are still part of that portfolio. So the depth of the ServiceNow alliance with Deloitte allows Deloitte to demonstrate a lot of that cross-industry and functional knowledge and elevate the value of its shared services, which, again, this is something that continues to test overall Deloitte's value proposition, given the fact that it's part of the Big Four, and the internal friction between the different member firms can often be a challenge. Expansion of the ServiceNow revenue growth opportunities will largely depend on Deloitte's ability to further scale what they call advise, integrate, operate framework, with workflow automation becoming a key area of focus. Deloitte ServiceNow industry portfolio alignment across the energy, the resources and industrials, financial services, government, public sector verticals help the two vendors really have a more targeted conversations and capitalize on opportunities where competitors do not interact with ServiceNow. So that alignment and understanding of which industries your partner sees you do best, it's as critical as you just, it's more critical, actually, I should say, than you just coming up and say, we operate in all these industries. It's more important for your partner to have that conversation and have a better alignment of our partner sees you, where they can actually drive those conversations a little bit more target. So having the, it's certainly a big piece of the puzzle, the alignment. Deloitte is among the global elite partner status, resellers, service providers, consulting systems implementation, and build partner, which very few of those partners that we have profiled here have the same category of sense. Obviously, Accenture is another one that it has a similar designation. Another vendor here to keep an eye, as I mentioned, is KPMG. I would say ServiceNow is one of the top 7 strategic partners for KPMG, okay, which represents a framework of trust and helps you to pursue opportunities across multiple domains, including finance, supply chain, and procurement operations. As KPMG evolves its value proposition to account for AI and the GenAI implications, the firm's relationship with ServiceNow will also provide insights into how to staff and address opportunities around workflow automation, and obviously starting with change management. We were recently attending KPMG Global Analyst Summit, and there was a client story that was shared that featured a ServiceNow implementation that brought cost savings and efficiencies to the client, notably emphasized change management, which is a core KPMG consulting capability that is sometimes overshadowed by technology. So still leaning on its strengths, but expanding alongside with the partner. So similarly, KPMG has that global elite partner status across all 4 categories, including reseller, service provider, consulting and implementation, as well as the build part of the ServiceNow portfolio. Different size, we're estimating Deloitte's size of the ServiceNow practice is just at the $1 billion mark. KPMG is just short of $500 million. But certainly both practices are growing at faster than the overall IT services revenue, just to kind of give you a sense of like how those companies think about it. And as we're thinking about the relationship between ServiceNow and the overall ecosystem, I think we want to touch on the last piece of that discussion is around commercial models and preferred commercial, because all the integration that companies invest on from a technology perspective can go so far unless companies align their commercial models, right? And the 2 graphs we have here on the slide come from, again, from our Voice of the Partner report. So the graph on the left is focused on the preferred commercial models when companies go to market together, again, trying to understand how the companies think about it. So services vendors, the way they think about their commercial models, need to contemplate how to handle transitioning from labor and tech-enabled arbitrage. That's the biggest challenge. They are trying to assess that perspective. Cloud vendors have to find ways to help clients retire technical debt while moving to consumption-based models. A good example here is, again, ServiceNow that we kind of hear from, at least have the time to think about the consumption-based model, especially the GenAI and agentic AI is impacting the value proposition. And then the OEMs, shifting from selling boxes, for lack of a better way to put it, to devices as a service is something the OEMs have tried with various degrees of success. Now they have to charge customers based on the realized value of their business outcomes. So building and embedding telemetry and monitoring tools to track usage, performance, and business impact can certainly help them to get closer to achieving their goals. But again, GenAI and AI overall enhance transparency, which can underpin or undermine trust. So they have to be very careful how they use and think about AI. There's a need for fundamental change to the business model that's combined with the pressure among the partners to restructure commercial models may bring some significant disruption in the next few years. So a lot of the traditional ways of commercialization, but the idea here is to look into and think about how is AI and Gen AI kind of impacting the value proposition and what it means to the commercial model that fits best. That's why we have the graph on the right. When we did the survey for the Voice of the Partner, we asked the 3 groups of vendors, what's your preferred commercial model when it comes to Gen AI and that they all use. So you can see that the top one, we offer commercial model geared towards outcomes centered on productivity improvements. Not surprising there. I mean, this is certainly something that all the vendors are really feel comfortable, at least from a messaging perspective. The reality is, I would say it's maybe not there yet. It's early innings, or so to speak, but service and cloud providers are leaning more heavily into testing that framework, which is not surprising given that companies try to expand the customer stickiness and constantly trying to demonstrate value. Meanwhile, the OEM vendors are more indifferent about which commercial models they use when selling Gen AI solutions, suggesting, again, they're sticking to their core value proposition route in transactions. Still, there's a notion that the OEM providers would even try to implement new commercial model that they would consider implementing new commercial models is worth noting and may indicate that they are warming up to the idea of demonstrating agility, something services and cloud vendors can definitely appreciate. So in a wrap, again, it's a sort of like fast-moving space, but the execution when it comes to looking a little bit closer, vendors have ideas, they're testing, they are trying different ways of engage. But again, not everyone is actually departing at the speed that maybe market suggests that it should be happening, because also consider about the buyer's readiness as well. And with that, I would turn it over for questions. Haley, any questions? All right, so first question I see here in the queue, and please send along. How do you view ServiceNow's push into the CRM and the overlap with Salesforce? TK, that's for you.
Sure. Yeah, it's definitely very interesting. You know, earlier this year at their partner kickoff, the big themes were Now Assist, but really CRM. And they kind of put a stake in the ground in terms of formalizing their commitment to that market. And I think that's gained a lot of attention, right? And so Salesforce has come into headlines a lot because of that. You know, obviously that ServiceNow still plays at the service delivery layer. They're not a CRM system of record. They don't have the capacity to be. So, you know, it's not any kind of direct overlap in that sense. That said, you know, there's certainly the potential to disrupt, right, and absorb some of those front-end processes and kind of challenge what you know, some more traditional CRM systems weren't really meant to do, and don't have that robust integration layer that ServiceNow really does have. So I think, you know, going forward, as that kind of, we see that overlap increase, and, you know, you see Salesforce kind of trying to launch their own ITSM ambitions, which of course is ServiceNow's core market. So as you see that overlap, you know, I think it only reinforces kind of what we talked about today, which is, you know, ServiceNow's need to build trust with the partners and make sure that they can really articulate the CRM value proposition.
So thank you, Katie. There's another question. Do you have theories on who is best suited to bring together the multi-party alliances structure? That's a great question. So it's interesting because when we look at the ecosystem overall, often we hear from the big four and the management consultancies trying to kind of stay in that upper echelon, right? And trying to be, you know, positioning themselves as the orchestrator of value. And often that requires a relationship with the various technology partners that because essentially they are having the access to the C-suite, the permission to the access to the data and so forth. So the orchestration comes more naturally in the conversation with those vendors. At the same time, you know, we hear hyperscalers can often be, you know, in terms of, you know, seen as the kind of backbone of a lot of the companies, a lot of the enterprises, digital transformation efforts. So they have a lot of the data that they're hosting, and they kind of have an understanding of what works and what doesn't. So it's an ongoing kind of a discussion, I should say. Often, obviously, the buyers are the ultimate judges. Who is best suited when it comes to managing those ecosystems. And I think it boils down to, again, how companies actually align their own priorities from pre-sales to sales and post-sales activities, because buyers can quickly identify who is there for actually delivering value versus who is trying to just to capture and cross-sell and upsell another solution, right? So having the right, you know, commercial model agreements, having the right accountability and governance frameworks, those are still aspects that are as important. And it became much harder when it comes to, you know, the 3 and 4 way of relationships. So that's why I was suggesting that there's some vendors that already thinking about that getting closer. So if we take the outcome-based pricing versus consumption-based pricing as a result of the advent of Gen AI and agentic AI, I think this is starting to bring the parties together closer. So when you start looking into services and technology providers, so we have not seen any, well, I should say it's really much more challenging for the software providers, for the SaaS vendors, for the cloud vendors to move beyond the traditional licensing model, right? Move beyond their subscription-based model and talk about outcome-based. But they need to also see how services providers that are helping them actually talk to the client. So starting to bring and think about something that's closer, such as the consumption-based model that maybe ServiceNow is kind of entertaining in the market from a go-to-market perspective. It's definitely compels the services and consulting partners to look at them a little more favorably, right, when it comes to the relationship. And then from there, at the infrastructure provider, at the chip manufacturers, at the hardware provider. So all these pieces, as we talked about earlier, about the different commercial models and what makes those companies, invest and co-invest, it's are a must-have. It's an emerging framework, I would say. It's an important framework. We have certainly heard really strong use cases of the value of that framework. So, for example, Informatica, in a conversation, not too long ago, we heard from them that how they saw that if they went to market by themselves, the close rate was about 15-17%. I think the number was. If they went with one partner, the close rate was 42-43%. But if they went with two or more partners, it was over 80% close rate. So there was a really strong, concrete example of like the value of having that multi-party relationship. Obviously, things have changed with Informatica since then, so that certainly presents, opportunity for looking at from the CSI perspective. Who are the top, partners that maybe Informatica and Salesforce have? Is it Accenture? Is it Deloitte? Is it EY? What are the vendors that can help them, bring into that perspective to become an ecosystem orchestrator to drive that multi-party alliances? So a lot of moving pieces, but we're starting to see some, formations that, especially some of the vendors like the Big Four, are more restricted with who they can partner. So that kind of I don't want to say boxes them in, but put them in the perspective of like, we need to invest really deep in those relationships, and those are the partnerships of choice, and drive those multi-party ecosystems at scale.